3 months after one of the fastest and worst stock market crashes ever in history, the S&P 500 is just 5% away from all-time highs. The Nasdaq is up 16% year to date. Tesla was over $1,700 per share a few days ago, and Amazon was over $3,300. These are just crazy numbers during such crazy times.
Hey guys, Stan here again, and welcome back to my perspective. If you're new to the channel and you want to learn more about investing in the stock market, become more financially literate, consider subscribing to my channel, and remember to hit that bell so you won't miss anything. And if you also enjoy this video, please give a thumbs up so that other investors on this platform can see this video as well. With all the craziness going on in the stock market right now, what has been happening to our lives in reality? The reality is global cases are still on the rise, and just like the stock market, COVID-19 has been setting new records for the number of cases on a daily basis. And as we have seen, attempts to reopen the economy has caused further complications. Now it's as if the economy itself needs a vaccine of its own.
Central banks around the world have printed so much money already. Seemingly it feels like the central banks are just stuffing the wound with cash. We're talking about trillions and trillions of dollars. The Fed has increased its assets from 4 trillion to 7 trillion. The capital market is simply not free anymore, and these were the words of Ray Dalio, who manages the world's largest hedge fund. Maybe the invisible hand, once termed by the father of economics, Adam Smith, is actually the hand of the Fed.
But anyhow, in this video we're going to take a different perspective to try and understand this rally that's going on in the stock market. It's a perspective that has witnessed the change in how people are living their lives, and may have possibly changed how people are perceiving the stock market. And that perspective is technology. Most of you may remember the days when the concept of the internet was still so new and intriguing. The days when owning a laptop or a computer as a kid was a dream. But nowadays a tablet or a laptop seem to be in most school stationery lists. But these devices are still kind of useless without the internet, right?
And during this time, a whole lot of internet companies rose to stardom too quickly. For example, one of the .com companies was Pets.com. The idea was simple. It was to sell pet supplies online and deliver them to the customers. From its IPO in February 2000, it raised $82 million, but had gone bankrupt in November that year as well. The problem with Pets.com was that the company had overestimated the demand for people buying it online compared to buying it from your local store nearby. People simply didn't need this kind of service, and instead of understanding the drivers of demand, they had expended all this money on advertising campaigns and warehouse facilities that stored the pet supplies. At the time, people simply didn't understand what the internet could be used for. Take this idea and fast forward 20 years. Now the internet is literally accessible from anywhere, and it's even the foundation for some of the most valuable companies right now. Quite frankly, it's almost not possible to have a successful global business right now without embracing the internet. All this has been and still is accelerated by better infrastructure. This means continuously creating better chips for computers, laptops, mobiles, etc., better processors, more memory, and for the goal of creating better, faster, and more efficient output. This is the future. We look to technology for solutions to our daily problems, and that is a big reason why these tech stocks are so highly anticipated, because unlike brick and mortar businesses, there is unlimited potential and growth with some of these tech stocks. This is an infographic showing the biggest tech companies and how they make money. Apart from Facebook, we see how the other big techs have diversified into other services like Amazon. In addition to its stores, they've got AWS, Amazon Prime, and other third-party seller services. And Apple, on top of its products, it also has Apple Pay, Apple Music, Apple TV. Although Facebook may seem less diversified, with almost 100% revenue coming from Facebook ads, you have to remember it also has Instagram, and the monetization potential with Instagram is still so huge. We can see that these tech companies, where some weren't even in existence 20 odd years ago, are now everywhere in our lives. So let's take it back to reality for a moment. Can we fight COVID-19 without technology? Probably not very well. And can we find a vaccine without technology? That would probably make it twice as hard as it is already. Take Blue Ocean's UV disinfecting robots, for example. These robots are currently used in hospitals and they use ultraviolet light to help reduce germs and the spread of these infectious diseases. Yes, UV light is harmful to people, so these robots actually shut down once they detect people walking nearby.
And that is just one example of how tech is helping us fight the disease. Maybe people have realized the importance and scalability of technology in a world where social distancing is no longer a foreign term. Tech is bringing us closer together. And with such low interest rates and unattractive yields on bonds, there's no doubt that both the retail and institutional investors are moving their funds into tech stocks.
According to Lipper, the tech sector took in $1.3 billion of net new money for the fund flows during the week ended July the 8th. This streak has driven the group to its third best quarterly net inflow result ever in Q2, trailing only the net intakes produced during the tech boom over 20 years ago. Wow, so net inflows to tech trailing only that of during the tech boom. No wonder it's sending out the message that we may be approaching a tech bubble again. The truth is, things are different compared to what it was 20 years ago. Tech stocks have shown investors that they can still shine despite the current global situation.
But at the moment, there is certainly a lot of hope and anticipation placed on these growth stocks to lead the economy. But are we getting a bit too far ahead of ourselves? Sure, you may be able to justify valuations on certain stocks, but some stocks have valuations that are out of this world.
Like Zoom, it currently has a share price of around $270 USD, with a 1600 price to earnings ratio and a price to sales ratio of almost 100. The share price has more than doubled in the span of a few months on the back of the massive growth since the start of COVID, and is actually now estimated to grow at 40% per year for the next 5 years. It sure has benefited from people working remotely, but does it have a unique business model that can sustain a 40% growth per year? And bear in mind the level of competition already in video conferencing.
With a lot of those expectations already built into some of these growth stocks, it will be harder and harder for these growth stocks to outperform those expectations. We're definitely seeing a rise in the popularity of these stocks across investors, but no one knows how long it will last for before the next drop. Obviously, I'm bullish on tech over the long term, but buying heavy into the market right now may not be the most sensible thing to do. And that's just my 2 cents on the current situation. But if you have any opinions on the current market, do leave a comment down below. And as always, have an awesome day, and I'll see you in my next video.